$11,000 on a single trading day post FOMC. Guys, I'm going to break down these two trades on GBPUSD and EURUSD and exactly what I did today post FOMC to analyze the data, understand the data, and find this move on the dollar. I'm going to share tips and tricks that you can implement in your trading by the end of watching this video. So without further ado, let's get into it. Right, guys, first of all, I want to start on the dollar index. Dollar index had broken to the upside, but I want to really remind you of something first. Last week, I was selling dollar CAD. Actually, my previous video in this series was on dollar CAD shorts. Why was I selling the dollar? The dollar was largely expected and priced in for the Federal Reserve to follow through with a 50 basis point rate cut. Did they? They didn't. They followed through with a 25 basis points rate cut, and that's a lot less than marginally priced in and a lot less than expected, right? So you want to really think about this for a second. And if you look at the dollar index, the dollar, according to my analysis last week, sold off quite aggressively, and we had that follow through to the downside. Guess what happened thereafter? We then saw the reversal. Why? The market already priced that in. When the market prices something in, you're looking for the very next leg. And that's exactly what I did in the euro. So the euro today, if you look at it on the prior trading day, yesterday was a shooting star bearish reversal. What does that tell us? Sellers, right? I'm not even going to get into candlesticks. You all know that by now. But you want to really look at this and think to yourself, fine. If we've had this initial sell-off on the euro, the market is less dovish and less bearish on the dollar because the Federal Reserve didn't do 50 basis points like everyone thought. They did 25. What happens then? You start to see an unwind of what was previously priced in. And that's exactly what we saw here. So the euro had this rally to the upside. Now that the market is now repricing what happened on the FOMC, you can then expect a reversal of what happened that day. So we had the reversal to the downside there. My immediate reaction was sell any rally that I can get. And I actually made a breakdown of this. I'll try and insert it here. For the likes of euro, we can look at this and see that, yeah, there's a chance for this to be repriced to the downside. What this trade would look like for you, let's go ahead and draw it in. 30 pips stop, max, and then just target these lows. Where I spoke about this morning inside my free community. So a quick little plug there, guys. Check the free link in my bio. Join my community. I'm super active in there. Market Edge. See you there. So we've obviously had this immediate reversal, right? My immediate reaction is sell any rally that I can get. So the first option was price came back into these previous lows. And all I'm doing is looking for the continuation to the downside. That's it. Easy as. So again, I went in with it was about 30 pip stop on the euro, looking for the follow through to the downside. And then equally so, the second position of this today was on GBPUSD. Guys, I don't need to draw 100 things on the chart. All I'm understanding is market flows. Look at the pound. What happened to the pound last week? Pound rallied last week and early this week. Price rallied, right? Why? Everyone thought the Federal Reserve was going to come to an end and Powell's going to cut by 50 basis points because Trump tells him to. Did he? No, he didn't. So guess what happens to the dollar? The dollar then has this recovery back to the upside. I'll actually try and insert it here as well. But this morning, I expected a bounce off of these previous highs. Look at the bounce. And I actually want to show you something there for a second on the pound. Once you actually, I just done this, my evening breakdown. Once you measure the legs in the market and you understand how it works, you will be surprised by how accurate these legs are when you actually understand what they mean. So yesterday on the FOMC, loads of volatility, loads of wicks, especially on gold. Right, I spoke about gold as well this morning. Look at the spikes on gold. How many people blew their accounts on that? Tons, right? Tons of people would have blown their accounts on that. Let me reduce the light on this. It's horrible. So tons of people would have blown their accounts on that, right? What's better? Reviewing the FOMC after looking at the facts, looking at what they actually did versus the expectation, right? And coming to the market and looking at what was priced in before the FOMC. Did the FOMC do what the market priced in? If no, do the opposite, right? Same thing with dollar CAD. We're short on dollar CAD. This was a great trade, right? Sold this to the downside. Ignore this. I like to draw on the charts when I speak. But great follow through to the downside on dollar CAD, right? Whatever we had today, we had the unwind, we had the correction. So basically on the pound and the euro, this was literally just an unwind trade. The market ran to the upside, expecting the Fed to cut rates by more than what they actually did. Do the opposite. Literally just do the opposite. And I actually had a question inside my community today of how do I manage my emotions from going from one loss, and I'll show you the loss in a second, and jumping straight back into the market, no questions asked. So one of the first examples will be on dollar CAD. Dollar CAD, I was short around this area, stops above the high, and I was looking for the lows, right? Price went into a little bit of profit, and we had the reversal, stopped us out straight away. What did I do? Did I chase it short again? No, I waited for the reversal. It's exactly what I did, yeah. Waited for the reversal. I went short. I rode it to the downside perfectly. Actually, we went to where my previous target was. Inevitably, we got there. Maybe I was early. Doesn't matter. I was still wrong. But one thing you don't want to do is constantly enter the trade because perhaps you're wrong. And I'll show you the next example, which is a really good one, which is EURUSD. Let's put that back. So EURUSD, I have been monitoring this for quite some time. This was actually just an example, by the way, on one of the breakdowns I was doing. I was monitoring EURUSD around this region a couple of weeks ago. Actually, to the start of September, I was monitoring this. We went range bound. We had a push to the upside. We tested the support, which I needed to break. Didn't break. We had a push to the upside, running through 199. And we actually had that break through the support of 198. Notice how we came back and tapped that ever so perfectly. Then we had that continuation. We were off. And I actually missed this trade. This is early hours of the morning, around 2:30 in the morning. I actually told my community, whether you're interested in this or not, it might be worth putting a limit order. And guess who didn't put a limit order? I didn't. I've had bad experiences with limit orders in the past. I feel I want to be accountable for my entry. I want to be accountable for my exposure. Because what's happened to me in the past, and this used to happen on GBPUSD quite a lot, I would set an order and a EURUSD. I have my fair history with EURUSD. I'd put my orders on overnight, my limit orders. And what would really annoy me is if I wake up in the morning and prices triggered my limit and hit my stop loss at the same time, that would ruin my day. So I've basically woken up in a loss, which is unnecessary, right? So accept it, go to bed, wake up the next morning, review the market, see if there's anything there. If there's nothing there, leave it. Right, and that's something I wanted to speak about today. I had this question in my community. How do I, and it is impressive that I go to the very next trade despite the outcome of the previous trade. Something that I want to preach and I really want to remind you is that you can't let the losses get to your heart, but equally you can't let the winners get to your head. You can't get excited when you win. You can't feel euphoric when you win, because chances are there is a losing trade around the corner that is coming. What you do want to remind yourself of is you're in control of your exposure at any given time. So it doesn't matter what happens on any single trade, but what you should focus your energy and your efforts on instead is managing your emotions, managing your mindset, because if you can take one and treat one trade at a time, irrespective of what happened in the past, you are going to make money as a trader. And that will probably be your best skill set that you learn. If you can, regardless of what happened in the previous trade, move straight back onto the very next trade, you will do well. So try and keep that in mind. But to summarize this video, guys, it was a great reversal on the dollar there, back to the upside, pretty much unwinding what was previously priced in. And we saw that in the form of euro to the downside, pound to the downside. I actually have some runners that I'm leaving running. I do think this is going to trade a lot lower. I think GBPUSD back to 134, euro potentially back to like 116.50. So the runners are at break even. So I'll see if I can just ride those out, see how they play out. Whatever happens to them, I'll make an update video and update you guys. But I hope you enjoyed this video. Let that be the summary of this lesson, is that going into the FOMC meetings, you want to look at what was marginally priced in. For that, if you've watched till now, I'll give you a bit of a freebie. I use the CME Fed Watch tool. Go ahead and Google it. It'll take you straight there. This shows you the market probabilities of what is expected into an event, right? You want to do that. Then you also want to look at how the markets react leading up into the event. If everyone is expecting the Federal Reserve to do something and they don't do that thing, do the opposite of what the market had priced in, because the market is going to unwind what the market had previously priced in. So you want to keep that in mind. But in terms of a technical play, this is a clear reversal continuation trade, looking for that continuation after we had the reversal on all time frames. So you want to keep that in mind, guys. But if you have watched till now, thank you very much. Check the links in the description down below. Check my free community, super active in there, Market Edge. If you're struggling in your trading, get involved, speak to us, let us help you. Trading may be difficult, no doubt, but trading doesn't have to be done alone. And trading can be very simple if you have the right plan and the right system in place. Get in touch, we'll be happy to help. But if you haven't watched till now, thank you very much. Make sure you like, comment, subscribe to the channel. And like always, my friends, keep going. See you on the next one.